Good afternoon. We are team number 17, and we're going to present our project of the working capital management subject. First, the financial analysis of Amazon, Apple, and Microsoft evaluates their strength and sustainability in a volatile economy. It examines financial statements, profitability, ratios, and their working capital management and cash conversion cycle to assess value creation. The study compares their business models, Amazon in e-commerce and cloud services, um, Apple in technology manufacturing, and Microsoft in software and cloud computing, while revealing operational efficiency issues and segment dependence. It also includes future performance projections and profitability improvement strategies, providing a comprehensive overview of their market positions, challenges, and opportunities. The companies that will be analyzed in this project are Apple, Amazon, and Microsoft.
Now, indicators analyzed. First of all is financial statements, that is income statement and balance sheet. Then profitability ratios, that is gross margin, operating margin, net margin, ROA and ROE. Activity ratios, inventory turnover, total assets turnover, accounts payable turnover, and accounts receivable turnover. Then we have net working capital management, that is analyze of net working capital, operating liquidity, and short-term financing. Then we have cash conversion cycle, that is the days of inventories, day of accounts receivable, and days of accounts payable. Comparative charts of financial ratios, and finally, we have pro forma income statement for estimating future scenarios.
Now, I'm gonna talk about the general problems that we identified. First of all, companies often encounter profitability and operational efficiency and financial stability challenges. So the key issues include low profit margins driven by high operational costs, excessive inventory investment, extending cash conversion cycles, and reliance on a single revenue source. Additionally, they face volatility in operating costs, limited working capital, impacting liquidity, and inefficient forecasting, leading to overstocking or stockouts. So the solutions that we propose is that, well, to tackle these operational challenges, we think that companies should implement advanced automation, enhance inventory management with better forecasting, and improve cash flow by negotiating favorable terms. Also, diversifying revenue and adjusting pricing strategies that will further mitigate risks and counteract rising costs. Also, ultimately boosting efficiency, liquidity, and competitiveness.
As we analyze Apple's financial performance, we can observe several key trends across the charts and tables presented. First are profitability ratios, including gross margin, operating margin, and net margin, remain constantly strong. The chart shows that Apple maintains one of the highest profitability levels in the industry, primarily driven by high-value products and an efficient cost structure.
Now I will describe Amazon's graph and table. Starting with profitability, Amazon shows lower margins compared to Microsoft and Apple. This is visible in the gross and operating margin bars. Retail operations generate very low margins, while AYS provides most of the profitabilities.
Now, also looking at the profitability ratios that Microsoft shows with a strong operational performance, the operating margin and net margin remain high, which confirms that Microsoft continues to be highly efficient at turning revenues into profit, especially through Azure and enterprise software, which is something that we talked about. In some of our paragraphs. And also analyzing the activity ratios that we'll show later. The tables show slower accounts receivable turnover. And so this means that customers, especially large enterprise clients, take longer to pay, which is normal in long-term service contracts, but still affects cash flow. Also, we'll be showing a little bit more about the graphs of the next tables, and so you can see the difference of each company.
Yeah, and in the activity radius section, the table indicate that our inventory turnover is relatively fast compared to other technology manufacturers. This reflects Apple's lean supply chain model, which minimizes excess stock but also increases sensitivity and to demand fluctuations. The charts also show stable asset turnover, demonstrating efficient use of total assets to generate revenue.
Well, in the activity radio shows very high inventory turnover, which indicates fast movement of product but also very high logistic cost. This explains why the net margin stays low even when sales volume is high.
When examining Apple's networking capital management, the data reveals that we operate with low working capital levels. This strengthens efficiency but also creates vulnerability to supply chain disruptions. The tables show how strong liquidity but a tightly managed balance between short-term assets and liabilities.
Well, in the working capital section, Amazon has very tight liquidity. The table shows low working capital because Amazon reinvests aggressively and operates with high inventory levels in its retail segment.
And here we have also the chart that shows those numbers mentioned. And finally, looking at the cash conversion cycle, the graphs illustrate that Apple maintains very low inventory days and relatively short collection periods. However, the cycle is affected by the need to pay certain key suppliers in advance, which increases pressure on cash flow.
Yeah, in the cash conversion cycle, Amazon has long days of inventory, which delays cash recovery. At the same time, transportation, storage, and labor fluctuation increase operational volatility.
In my opinion, completing this project was essential for understanding how financial data reflects the internal functioning and stability of a company. Through the detailed study of Amazon, Apple, and Microsoft, I was able to clearly see how each company faces different challenges and how their financial indicator reveal its strengths and weaknesses. I also believe that this comparative analysis provide me with a broader perspective on the role that financial intelligence plays in modern organizational management and reinforce the importance of evaluating each indicator with a strategy mindset.
Overall, the charts reveal that Amazon depends heavily on AYS to compensate for the weak margins of retail, and that its main financial challenge are logistic cost volatility and long cash conversion.
Now, from my perspective, I think that the project allowed me to gain a deeper understanding of the importance of this financial analysis to help us as a key tool for evaluating a company's health and performance. Also, by studying the financial statements and profitability and with the activity ratios, as well as the working capital and the cash conversion cycle, that I think that it's really helpful to us to identify the problems that the company may be challenging. So I was able to identify how each indicator relates to the real operation of an organization and how it directly like influence its ability to grow and remain competitive.
And that would be all. Thank you for listening.
Thank you.